Hi, and welcome to another exciting issue of The Pit, Personal Investment Tools and Techniques for the Active Trader. This is not investment advice. I am not a financial advisor, and past performance is not indicative of future results. Today is Friday, May 9th, 2025. Here are the charts that caught my attention this week. First, let's discuss the stock indices, mainly the ES futures. Here is this year's action in ES futures. Note the clear trend line break last week. This is carried through nicely on the upside, and prices hugging the upsloping trend line. Thus, if you got in a long position on the trend line break, your stop is going to be very tight. In early April, price formed a tweezer bottom after a dramatic sell-off. This caused a dramatic rally of its own, carrying prices up over 10% in one day. I believe that was because of a Trump tweet and the tariff reaction. The reaction to this big up move ended in mid-April with a bullish engulfing bar that I've highlighted. This caused a breakaway gap and the subsequent break of that downtrend line that I previously mentioned. Prior to the break, we have a number 9 trend change pattern. This is one of our 9 patterns which signal a trend change, and this helps send prices even higher. I think the low risk trade now, thanks to this upsloping trend line, is to the upside. Next, let's go to gold. Here is the gold daily chart. After a major move off the reaction lows in early April, gold formed an ABC reaction to end out April, culminating the first day of May. From there, prices rallied from 3,240 an ounce to just shy of 3,440. So it rallied about $200 in just 2 days, which is outstanding. Prices pulled back, and Friday had a clear out bar. A clear out bar is a bar which goes below the prior day's low and then finds buyers and rallies up to close not only above the prior day's low, but above today or that day's open. And that's exactly what happened. We didn't get a strong close, closing only in the top half. I would have liked it better if the close of today was within 10 to 20% of the high of today's bar. This, relatively speaking, low close could signal we might have some more downward action, maybe down to the support point that I've highlighted, the bottom of those tails. Next, let's go to crude oil. Here are the daily bars of the crude oil chart. Crude oil has broken the downtrend line. Again, another downtrend line break. This trend line down has 4 touch points, which I have not highlighted, making it valid. You want a trend line to have at least 3 touch points. Resistance in crude should be at the prior pivot high around $65 a barrel. This resistance should extend to the March lows around the 65.50 area. So you've got resistance from 65 to 65.50. From there, will it make new highs up around the 72, new yearly highs up around the 72, 73 range? Who knows? We will find out. Note the classic exhaustion gap down on the 3rd trading day of May. This was an exhaustion gap down open. Prices gap below the tail low of that first day of May and found buyers immediately. From that close, prices rallied $4. That's a nice move. Keeping with energies, let's go to natural gas. Natural gas had a nice breakout of a cup and handle pattern. Here it is. After reaching new lows for 2025 under 3, prices quickly sprung back up. Springs and upthrust are very important. This is a spring around that prior low in late January. And note that the spring ended with a breakaway gap. This is our second pattern that signals a trend change. So these 9 patterns show up consistently. Natural gas should meet resistance at this level, as these are the 2 prior pivot lows from the March pivot lows. We can see there. I've kind of highlighted it there. So we're at key resistance levels in natural gas. Next, let's go to copper. Copper's had a nice 23% rally from the lows of mid-April. That's an outstanding move. It ended the month of April up near its highs of, well, actually it had a strong tail, or a weak tail up there at the high, so closing low. That told you that lower prices might be coming, and that's exactly what it did. You've got one big day of profit taking there, but I believe this could turn out to be the A leg of a bigger ABC down, right to the Fibonacci 50% point, which is the green line there around 4.5. Note Friday's action, today's action, was a wide range clear out bar. Not only that, it was a bullish engulfing bar. So it went below the prior day's low, closed back up above the prior day's low and today's open. So that's a classic clear out and also engulfing bar. I think we'll have at least the test of the highs around $5, and possibly this might be a continuation move up to new yearly highs. That's it for commodities. Let's go to crypto. We all know that Bitcoin has been rallying, but I think Ethereum has a bigger, better move this week. Ethereum was in a line formation spanning $100 from around 1750 up to just a little bit higher than 1850, 1,850. These are 4-hour bars. The last 4-hour bar on May 7th had a yum break through the top of the line pattern, closing at 1900. My father coined the term yum. He says it means payday, and he is not wrong here. From the close of that breakout yum bar, Ethereum rallied almost $5,000. That's a 30% move in just a few days. All the while having only one down bar in the middle of that action. And it really wasn't much of a down bar. It closed below the open, but I'm not sure it closed below the prior bar's close. Ethereum has not reacted down much in this entire move, and from this entire move, and the 4-hour chart is showing right now a double inside bar. I think you've got to play the breakout of that. If you're long, maybe enter a stop to cover below the 2 inside bars, or maybe get a little bit longer on the break above those 2 inside bars. Of course, this is not investment advice. Thanks for watching. I hope you enjoyed this. If you did, please like and subscribe, and let me know how I can make this better.